Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, October 22nd. Global economic concerns and worries over corporate earnings sank stocks for the second straight session. The S&P 500 spent the entire session in negative territory, falling 6.1% to its lowest closing level in 5 years. Weakness was broad-based, with 478 of the S&P 500 components posting a loss, although volume was on the light side when considering the scope of this session's move. Similar to Tuesday, the majority of companies reported better than expected earnings for the latest quarter, but outlooks were negative. Of the companies that issued earnings guidance with their quarterly reports, 39% were negative, 29% were in line, 24% were mixed, and only 7% were positive. A few of the more widely held names that topped earnings estimates include Apple, McDonald's, Merck, and Philip Morris International. Of note, though, Merck plans to cut 7,200 jobs, or 13% of its workforce, by 2011. Yahoo reported a profit drop that met estimates, but then said it plans to lay off 1,500, or approximately 10% of its workforce. AT&T and Boeing are two of the bigger names that missed earnings estimates. All 10 of the economic sectors posted a loss, ranging from down 10.4% for energy to down 3.8% for consumer staples. A sharp drop in crude prices in conjunction with disappointing earnings from ConocoPhillips and Baker Hughes caused a 10.4% decline in energy stocks. On a related note, the materials sector fell 8.3% as copper prices plunged 9.7%. The defensive-oriented consumer staples sector outperformed on a relative basis with a decline of 3.8%. The dollar rallied for the third straight session, with today's gains fueled by weakness in overseas markets and Bank of England Governor King saying that a UK recession seems likely. The Dow Jones World Index, excluding the United States, dropped 6.8%. The strength in the dollar and global economic fears sparked a broad-based sell-off in commodities, which dropped 4.5% overall. Crude oil prices plunged 7.4% to $66.84, with selling interest compounded by the fourth straight weekly increase in inventories. As stocks and commodities faltered, the long end of the Treasury curve rallied as investors sought safety. The benchmark 10-year note climbed more than a point to push its yield down to 3.6%. I'm Pat O'Hare for Briefing.com. Thanks for listening.